Child, the record. All right. Basically, those are the things that we look at today. Do you have any question? Joycelyn, do you have any question?
No, please.
So, are we all okay with the breakdown? Richard, are you okay?
I'm very fine.
Okay, if we are all okay, then we should stop the class because we understand everything. Or what do you think? Because I have said all that we are going to do.
I hope this is
We are okay with the preamble you are doing.
Yes, is the preamble is the course outline, and it's everything that we are going to do. I've explained all that we are going to do.
a skeletal form, so we need to go into this.
No, I've done the introduction, I've done everything. So whatever I'm going to say later, I've said it already. So it will be just be repetition. Since you're all okay, I'm suggesting you should just end the class. Because you know everything already. I don't have to waste my energy again. All right. But let's some people are still saying that you have to go through. So let's go through because we say that the time is three hours. So let's just be here and consume the 3 hours. All right. So I will share my screen with you and we get into it. All right. All right. So we are saying that contemporary approaches to management accounting. We understand that contemporary approaches are the new developments, new things that are happening in the world that is making organizations to do well that management accountant has to take notice of. The first one that we are going to look at is ethics. Ethics. You see, as a management accountant, since you are handling money, it is assumed that you are going to engage in activities or you are going to engage in certain things that will not speak well about you. And you're also going to encounter some of the things. You're going to encounter some things at the workplace that you need to know how to handle them. Maybe you have a boss. You have a boss that who always think that he knows. He doesn't listen to anyone. How do you handle a person like that? That is where there's a need for us to talk about ethics. You have a boss who thinks that whenever he is wrong, he thinks that he's always right. How do you handle such a boss? That is what we have to learn about the ethics. So if you talk about ethics, what comes to your mind? Ethics, what comes to mind? Ethics. We talk about ethics, what comes to mind? Okay, I'll be mentioning names since people don't want to talk. Dennis. I'll be mentioning people that I think I'm older than them or we are age mates. So Dennis, I think I'm older than you. So ethics. Yes, how are you?
Class.
Okay.
Ethical issues are looking at certain morality that you put in the work. Okay. What is the right thing, and what are some of the wrong things that these are ethical issues that are the report nowadays.
All right, nice. That is very nice. I mean, you were part of yesterday's class.
Yeah, please.
All right, thank you. You are doing repetition. All right. Habakkuk, ethics. Habakkuk, ethics. All right, Habakkuk is not ready to talk. If you talk about ethics, we are just saying that you acting in a good conduct. You acting in a good conduct, that is ethics. You doing what you think is right. But not that you are doing what you think is right, is actually wrong that you are doing it. But if you say ethics, we can take this particular thing from the Bible, do unto others what you want others to do unto you. You doing what you want others to do unto you. That is ethics. Like if I should do this thing to this person, how would the person feel? So why should I do it in the first place? if someone should do this thing to me, how will I feel? And why should I do these things in the first place? So ethics is basically acting in a good conduct. You doing to others what you want others to do unto you. That is basically about ethics. And ethics also has to do with acting in a public interest, acting in a public interest, or protecting the interest of the public. Forgetting about your self-interest or the personal interest and pursuing the interest of the general public. So anything that is going to damage the image of the general public, don't do it. Don't do it. So if you are doing that, we see that you are being ethical. You are being ethical. That's why we are saying. That's why we are saying that. Okay. Messi is saying that ethics are moral principles that govern a person's behavior. That is very nice. That is very nice. So you doing what is right is all about ethics, acting in a good conduct. That is ethics. So we have a principle that all chartered management accountants, all chartered accountants, all chartered auditors are being expected to obey. So this code is being issued by the International Federation of Accountants, which is the IFAC. So we call it IFAC Code of Ethics, IFAC Code of Professional Principles, or IFAC Code of Ethics. And in this code, there are 5 basic principles that every accountant, every professional accountant, every professional auditor, every professional management accountant are expected to exhibit at the workplace, or they are expected to obey, or they are expected to possess. And we are going to look at them. We are going to look at them one by one. The first one is integrity. Integrity. If they say integrity, what comes to your mind? You say you are protecting your integrity. What is the meaning? You are protecting your integrity. What is the meaning?
When you talk about integrity,
Yeah.
you referring to your dignity, your reputation,
Okay.
in
So-
regards to professional discharge of your duties.
So if you're talking about your reputation, how can you protect your reputation? What are the things that you do? What are the ways in which you can protect your reputation?
Yeah, by discharging yourself in a manner that is professionally approved.
That is professionally approved. Example of this manner is what?
For instance, the guidelines set out how to handle one particular procedure to the end.
Okay.
And check and balances that are put in place, you follow them to the latter.
Okay. Okay. That is very nice. That is very nice. Thank you. All right. Someone to talk. Is it Portia?
Yes.
Okay. Portia. Which of the Portia? The one I
Okay, so
know?
integrity. No, I don't know.
Me too, I don't know you. I know one Portia, but it's not you. That Portia, her voice is not nice,
Okay.
but your own is nice. So let's move on. Okay, integrity has to do with what?
It's about being straightforward and
Okay.
honest in
Okay.
your profession or your business relationships.
Okay. Okay. So you being honest, you being truthful, you being straightforward. What is how the thing is? Just say it like that. Yeah. Portia, do you want to say something?
No, I'm okay.
Or you just like my name?
Hey.
Okay, let's move on. There's nothing wrong with you liking my name. I mean, it's normal. Okay, so if they say integrity, just integrity means just being honest. Say it the way it is. Say it the way it is. Report it the way it is. Don't go and say because of this person is my friend, this person is my dad, then you go and be doing what is not right. So if you see the figure, if it is 2,000, just report 2,000. If you see the person and the company is doing what is not right, just say it. Don't present any false information. So integrity has to do with you being honest, truthful, and you not giving out any falseful information to the public. You're not deceiving the public with any information that is not appropriate. That is integrity. Let's move on to the another one, which is objectivity. 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 Yes, Patrick, objectivity. Patrick, can you hear me? Patrick is not here. Dennis.
When we talk about objectivity, we are looking at you being not being biased in the dealings of the business.
Okay.
You see it as you don't attach your personal sentiments to it
Okay.
to divert any or bend the law
Okay.
as it is. Yes.
Okay. All right. All right. That's nice. That's nice. Habakkuk. Habakkuk, are you there? Habakkuk, are you there? Kofi, are you there? Kofi, are you there? Is it that we just use a name that we don't know for the Zoom registration, or it's our real name?
I'm here, sir. It's a real name.
Okay, then talk. Integrity. I say integrity, objectivity.
So when we talk about the objectivity, it has to do with bias towards its decision making.
Okay.
In terms of the work it's doing.
Okay. All right. That's nice. That's nice. All right. So if they talk about integrity, what we are talking about is that you don't let any personal interest or any issue of undue influence override your business judgment. So if you're an auditor, you went to audit a firm and you realize that I keep on using this example. The firm, they are doing child trafficking or they are not paying tax. But unfortunately, your wife is the CEO of that particular company. Don't say that your wife is the CEO of that particular company. So you are not going to disclose that the company is engaging in illegal activities. That is the issue about objectivity. Don't let any issue of personal interest override your business judgment. Don't say the people say that if you report this, we are going to kill you, so you won't do it. No, don't say that where you are being. That is where it's a supermarket that you normally go there for bonuses. If you buy there, they will give you a rich discount. They give you gifts, Christmas gifts, and those kind of things. So because of those things that they have been giving to me, I won't say they are not doing the right thing. If you are doing that, you are not being, or you are not going according to the principle of objectivity. But despite all these bonuses and discounts, you still stand for the truth. Then you are being objective. You are being objective. That is what we mean by objectivity. The next one is professional competence and due care. Professional competence and due care. What do we mean by professional competence and due care? Professional competence and due care. Dennis.
Johnson.
Yeah, Dennis.
We are looking at the professional competence. Professional accountant must have the necessary, the requisite skills to perform its duties and to follow the rules.
Okay.
Now, the due care we'll look at what are some of the considerations that you put in place. You must exercise carefully within the law as governed by the profession.
Okay.
I think that's what I can say now.
Okay. Nice. Okay. Freema. I've forgotten the name that you mentioned to me. Auntie Freema. I've forgotten the name.
That's the is Freeman. That's it.
Okay. Professional competence and due care. What do you have for us?
Yes.
Okay, so it's about the accountant being up to date with what is happening in the field of
Professional competence and due.
Hey, Dennis. Freema.
Yes, please.
Okay. You okay, talk. Freema, talk. Freema, can you talk now? Professional competence and due care. Freema, can you talk now?
Hello.
Yeah.
Okay, so the professional competence is about you being knowledgeable and being up to date in your field of work.
Okay.
And then the due care is being diligent in all you do.
Okay. And making sure that your clients receive a professional and diligent service. That is all about professional competence. So what you are doing right now is part of the professional competence. I hope that most of you are accountants. So you are not chartered accountant, but you want to be familiar with the standards, the international financial reporting standards. You have to know how we apply those things. You see, some of you work in an auditing firm where you go to firms that you try to do, you try to handle their payroll expenses for them. You try to handle their second tier, third tier, and those things. But you never knew that there's a standard regulating that particular pension benefit. There's a standard which we call employees benefits. So maybe at the time that you are doing that, you don't know how to go about it. So you are going to render unprofessional or uncompleted work to your client. But if you should have been a chartered accountant, you should have known that there is a standard like that, and how, if there's an issue like this, is how we go about it. So what all of you are doing right now, you can see is a form of professional competence. It will fall under the professional competence. But you using the knowledge that you have acquired to give a professional and diligent work to your client is what you call a due care. So as a professional accountant, some people they chartered in 2012, and now maybe there are new standards. So as a professional accountant, you have to continue reading, looking for the new things that are happening, updating yourself. Don't go and tell someone that the standard that we use for leases is IAS 17. Meanwhile, there is no IAS 17 again. It has changed. So professional competence and due care has to do with you continually seeking for improvement in your field of work, and using this improvement to give a diligent and professional work to your clients. That is a professional competence and due care. Can we move on? Baba Sharif, are you okay? Baba Sharif, are you okay?
Yeah, I'm okay, sir.
One of these days, I'll pass through and take your headset. I like the headset.
Thank you.
So you should be preparing for me. One of these days, I'll pass through and get it. All right. The next one is confidentiality. The issue of confidentiality. As a professional accountant, this particular principle is very crucial. It's very important. If you are parrot, then you can't be a chartered accountant. You can't just be your this thing, first degree or second degree accountant. Don't be a professional accountant. If you are parrot, if you talk a lot, don't be a professional accountant. Anything that you say, you want to go and say it. Anything that you say, you want to go and say it. It will get to a time they will revoke your license and you will not again practice again. They can seize your certificate. Confidentiality is very crucial. It's very important. So let's move on. What do we mean by confidentiality? If they say confidentiality as a principle, what are the requirements? What are they requiring? Are they requiring you to do as a professional accountant in regards to confidentiality? What is the requirement? What is the profession requiring you to do as far as confidentiality is concerned? All right. Habakkuk, are you here? Habakkuk, are you here? Mercy, okay. Mercy, confidentiality, mercy.
Okay, confidentiality is keeping information, not disclosing information to a third party.
Okay. That is nice. That is nice. Confidentiality, not disclosing information. So they say confidentiality as a professional accountant, any information that you have access to from your client as a result of you carrying out your activities or you rendering your service to the client, after the end of the service, that information should stay there. Don't take it to anywhere. So any information that you are able to disclose as a result of you rendering your professional service to the client, after the contract is over, the information stays there. The information should stay there. Don't go to anyone and be telling that, oh, I went to company B, they were paying their staffs this amount of money. And as a professional accountant, don't disclose how much your colleagues are taking to the other colleagues. Salary is a very confidential information. So what we are saying is that as a professional accountant, any information that you are able to have access to as a result of you rendering your service or as a result of you carrying out your professional duties to a client, as soon as the service is over, your appointment with the client or your contract with the client is over, the information stays there. Don't take it to another company or a competitor and disclose any information to them. But there are cases where, or there are situations where the issue of confidentiality may be ignored. And one of these is that when there is a court case against the said professional accountant, and he has to defend himself by disclosing that confidential information, or that confidential information, the issue about confidentiality is ignored. So where there is a cases where the professional accountant has been sent to court for the work that he has done, and he can only be out of that particular case when he discloses this particular information. He's being expected to do such disclosure, but because he's trying to defend himself, so that disclosure is allowed. Another one is the information being in the interest of the public. You went to a client place and you realize that the client is doing illegal business. They are doing child trafficking. You know how crucial and how important, how sensitive child trafficking is to the public. So this is illegal, and this is of the benefit of the public interest. You can go to the appropriate authority and do this disclosure to them. It's allowed. But apart from these two or any of situation that you think appropriate, disclosure is not allowed. Disclosure is not allowed. If you are a chartered accountant, or if you are someone that you like drinking alcoholic drinks, as soon as you started seeing, stopped. Stop, because one day you take small and you start talking anyhow. So stop. All right. Because if you do so, confidentiality is very, I'm saying it's like a joke. It's very important. It's very crucial. Your certificate can be seized from you. Maybe you can even be sacked, and you will not practice, or you will not get appointments with any company again. It's very crucial. Confidentiality is very crucial. If you disclose information, you are spoiling the reputation of that particular company. You are damaging their reputation. So confidentiality is very important. It's not easy as I'm saying it. It's very important. Let's look at the last one, which is professional behavior. Professional behavior. What do you mean by professional behavior? We have to mention names again.
Okay, they have something to say.
Okay.
Professional behavior, it requires you, the accountant, to avoid any action that could negatively affect the reputation of the profession.
Okay.
And then you do that by complying with the laws and regulations.
Okay, give me one example of activities or behaviors that accountants will engage in that will destroy the reputation of the accountancy board.
Sorry, come again.
You are saying that professional behavior is basically about, as a professional accountant, you should not engage in activities that will negatively affect the reputation of the accountancy body, isn't it?
Yes.
And I'm saying that, give me one example of those activities that accountants will engage in that will negatively affect the reputation of the accountancy body.
Oh, well, maybe you overstating profits in preparing the financial statement of the company.
Okay. Okay. That's very nice. That is very nice. Prima.
So can I say this one too?
Okay.
Accountant in an ICAG tie or uniform, drunk and misbehaving on the road. Is that a good example?
It's a good example.
Okay.
As a chartered accountant, even if you drink in the house, you can make yourself fine in the house and sleep. But doing it on the
I
street.
think
Yeah, someone
Hello.
says something. Yeah, Dennis.
I think looking at gifts and hospitality,
Okay.
I think these areas also a professional accountant must be very careful when you're exercising your duty.
Okay.
Because next that maybe if you're an auditor and you're about to undercover something, I think the gifts and maybe the special treatment they give you, you must be very careful with it, because this is where they can also use you as a bait.
Okay.
As a bait on you. Yeah.
All right. That is
The
very
gifts and
nice.
hospitality.
You should run away from an ass.
Oh, you people should run away. Don't say you should. Me, they won't. Me, my belief is that these things are all on paper. So I value my life. I don't want to die. So if you give me, the money should be in dollars. If the money is in dollars, that I will take. But in cities there, I will just go and report it.
Why differences?
Why should the money be in dollars? Is that what you are saying?
Yes.
What is the
Yes.
exchange? What is the exchange rate as of today?
If I'm not like that, would be around, I think 12 cities or something like that.
So if you are giving $10,000, multiply the amount, let's see.
$120,000.
Okay.
The 120,000.
Okay. That is 120 Ghana cedis, isn't it? Okay. Just imagine the kind of house that I will build and rent to people. Even if they sack me from the work, I will still be getting rentals every month. You get it? So you're not getting
But
my point.
I don't think that will hold, because there's an exception to that.
No,
Because the money you apply,
the money
because it's a
that
bribe. Yes. Let's assume it's a bribe you have taken.
no,
in the form of,
we can't assume. It's not a bribe. To me, it's not a bribe. It's a gift.
Oh, so let's say you have a case. The client knew that you have seen something that you need to what? Maybe when you discover, you disclose it. Might put he or him into what? Into a certain tight corner. And he's offering you this.
That
looking
I
at
should
the
not,
job, that
I should
yes,
not disclose it. That I should take the
yes,
money, I should not disclose it.
you're indirectly, maybe he might not be telling you not to disclose it, but then looking at the situation, the parameter in which you fall into at that moment,
Yeah.
and this gift is also coming, you should know that he's aiming at something.
Okay.
So accepting that, I think, is quite dicey more. You have to be very careful.
To
as a
you,
professional.
to you.
Yeah.
To me, it's
To the
not.
profession.
Or the profession, I'm not sure. Profession is a profession. I mean, even if I'm dead, the profession will still exist. So I have to eat. So I'm saying that I know what the reason I'm saying I'll take the money in dollars is that I know that if they discover, they will sack me and I won't work again. So the money that I'm going to take should be able to take care of me when I'm not working again. But
okay, now, well, on the exception I want to say is that
yeah,
now it has been discovered that you took this money not in good faith.
okay.
And you use this money to establish yourself in other businesses.
Okay.
Yes. I don't think if this should proceed to court, because you gain, that property you have is that
they will seize it.
money that, yes, you took. Don't you think government can confiscate that?
Oh.
Because it's not your sweat, it's not your real money that you have earned.
But the government,
you earn it.
But the government is aware that I'm working and I can build a house. I'm working, I'm getting money. I can.
Yeah. You are working. So if assessment has to be done, how much do you earn? How much siblings do you have? How much do you give to your parents? And they calculate all these things. How many years have you worked? And how could you, what other businesses do you have to earn you this amount of money?
They have time to do all these things. And the Ghana is still like this. If they have time to do all these things, then will Ghana still be like this? You see what you are saying right now is an assumption. But the thing is, it's not good. It's not good. I'm just joking. It's not good.
Okay.
I just want to see if we have a truthful and honest chartered accountant on this particular call. But the thing is, it is always nice when you are outside the field. It is always nice to say, or if right now you are outside the field, people are playing football, you say, hey, if it should be me, I will score. So since you are outside the field, you say it, but get there, let's see. I will be monitoring Dennis. I'll get your number from the platform. I'll be monitoring whether you are going to decline it or you are going to say it. Let's move on. Let's move on. All right. Let's move on. So professional behavior has to do with engaging activities that will say something bad about the profession. You see, right now you are a senior accountant. You prepare a financial statement and give it to a junior accountant to review. What are you saying? You're saying that you don't know anything. What are you trying to say? It's not good. You are a chartered accountant and you are giving a financial your work to someone at the local government level who is not a chartered accountant to review for you, but you are a chartered accountant for maybe Cocoa Board and you are giving your work to someone who is a first degree holder at local government to review for you. What are you trying to say? What are you trying to say? You can only give a work to someone who is ahead of you. That one is accepted. So that is about professional behavior. But we are saying that as we are all talking about these principles, some people are trying to mention some of the things that will make you know to act in a good faith. So someone says that if they give you gifts and those kind of things, the gift might prevent you from being objective. The gift might prevent you from being honest. So as we have these principles, there are other things that will prevent you from going according to these principles. That's why we say you discover that the company is not paying tax and your wife is the CEO of the company. You think about, oh, my wife, if I should go and report them and right now the company is not working, my wife will be unemployed. And you would think about those things and say, okay, let it be, let it be. You can see that something is preventing you not to be ethical, not to be professional. So as we have these fundamental principles, there are some things that prevent us from going according to them, which we call the threat to the principles. We have the ethical threats, Basically, we have 5. The first one is the self-interest threats. What do we mean by self-interest threats? Self-interest threats. What do you mean by self-interest threats? What do you mean by self-interest threats? Raymond, what do you mean by self-interest threats?
Okay, so self-interest the threat of self-interest comes in when, as a result of something that you need or you might get, you refuse to do your work professionally. For example, if you are enticed with money.
Okay, that is nice. That is nice. That is nice. Dennis, self-interest traits.
Okay, self-interest threat. This is a threat to professional behavior of a professional accountant in the sense that, let's say you have an interest in certain dealings, let's say maybe preparation of the financial statements, maybe your boss has given you target when you earn up to 60% of the previous maybe revenue generated, will give you a bonus of so and so at the year end. Because your interest is there, you like to make the balance sheet look nice.
Okay.
So yeah, probability of you reporting non-true and fair balances in the account is very high, because you have an interest there. You see here, you are going to overstate revenue and then understate liability, so that you can get your bonus at the end of the end.
Okay.
So here, interest rate comes in, which affects your professional behavior.
Yeah, that is a nice observation. That is a nice observation. So the self-interest trait comes in when you are trying to put yourself before anyone else. You are trying to put your personal gain before everything. That is the self-interest trait. So I'll talk about the discounts. You go to a supermarket, they give you a discount and they are doing something, but because of the discount, you see, if I should say this thing right now, I might not be getting, or I will not get a discount again. So let me just continue enjoying the discounts. And these people, they are doing it. So why should I go and report them? That is the self-interest trait. Let's come to the self-review trait. Self-review traits. Self-review
Please,
traits.
I have an issue with the self-interest trait.
Okay.
Where
Okay.
the company manager uses or misuses or inappropriately uses the company's assets, does it amount to self-interest trait?
Inappropriately uses the company's assets.
Use of company assets.
For
Yes.
its own benefit.
Yes.
For his own benefit.
Yes, please.
Okay, so at the time that he's using the asset, that do they need the asset to do other things at that time? Or let's assume that they need or he rented the company's car to people for money and he's taking the money himself. Should we assume like that?
Well, maybe the manager using the company's property, not for the business of the company, for his personal, yes, for his own personal gain.
Okay, he's taking it to funeral and those things.
Yes.
Okay, is it the issue about, is it this thing that we're talking about is applicable to only professional accountants?
Okay.
Is applicable to only professional accountants. So if the manager is a professional accountant and the manager is doing this, we can say that the manager is being selfish. But what the manager is doing, is it causing something bad to the organization? Is it causing something bad to the organization? Is this what the manager is doing? Is it affecting his judgment or his dealings with the organization? We can only consider that as a threat when what he's doing is affecting the organization indirectly or is affecting his judgment. It's affecting his judgment. But in any case, we can say that the manager is being selfish. Are you getting it? But what he's doing, if it is affecting the organization indirectly or badly, and the manager is a chartered accountant, we can say that he's not being honest as a result of self-interest traits, or he's not being objective as a result of self-interest traits. Are you okay now? Richard, are you okay?
Can you come again, please?
I should come again with what?
What you just said, the
I said-
explanation you just gave.
I should say all again. All right. I'm saying that we can only say, I'm saying that the principles and the trade that we are talking about are applicable to only chartered accountants or chartered management, those who are professionals. So if the manager is a professional and is using the company's car for his own personal interest, and that particular action is affecting his judgment or is affecting his dealing with the organization. Maybe he's supposed to say something, but because of what he's doing, he's not saying the right thing. We can say that the manager is being honest, is being dishonest, or is not being truthful, and also being biased, or is not also placing his personal interest before the company. So he's not going according to the principle of objectivity and integrity. But if what he's doing, although we all agree that it's not good, but if what he's doing is not affecting his dealing, he's still running the organization very well in the best interest of the public and in the best interest of the owners, nothing is happening. Although that particular thing that he's doing is not right. But is that thing affecting his dealings with the organization? Is that thing affecting his functions? Is that thing affecting his rules? If it is not, we can't say he's not doing anything bad. But we can't say he's using self-interest because he's not trying to violate any of the principles. Although what he's doing is not right.
Okay.
All right. Richard, are you okay now?
But there's still another issue.
Okay. Jocelyn, are you okay?
Can I go ahead?
Okay, Richard, come in.
When it comes to incentive compensation arrangement,
Okay.
where maybe the accountant's bonus pay is linked to improvement in profitability of the company.
Okay.
And this accountant is part of the bonus scheme, or maybe is a member of the bonus scheme.
Okay.
Can we see that? Can we say that it amounts to self-interest threat?
If he is using his membership to manipulate things, you see, we can only say the threats. The threat is always there when he's trying to take advantage of the situation. But he's part of the team and he's still doing the right thing, then there's no issue. But if he's a part of the member, the team, and he's trying to manipulate things to make the benefits looks like, then he's being unprofessional. That is why we come with the threat. But if there's a question in the exam and they say the accountant is part of the people, the committee, the remuneration committee, or yes, it's part of the remuneration committee. The question can ask you, what are the ethical issues there? So you have to come out to say that, okay, because of the membership of the accountant, it is likely possible that he's going to say something that is not right because he also wants a higher bonus. He might be able to report an issue that is not correct. So you can come with a self-interest first. But if that is not, his membership is not affecting his work, he's still doing the work diligently, professionally, and everything is correct, we don't have any threat there. Are you okay?
Oh, okay.
All right.
Thank you.
Okay. So we have the self-review threat. Self-review threat. Let's move on fast. Self-review threat. Self-review threat. Because I assume that some people are doing FR, some people are doing CR, because ethical issues is very crucial in this one. Even you see it in advanced audits and assurance. There's 10 marks over there. That's why I'm taking my time to explain these ones. All right. Self-review threats. What do you mean by self-review threats? What do you mean by that? I won't talk again. So if you talk, then I'll reserve my energy for the next slide. All right.
Okay, what I'll say that what I understand is, let's say the accountant being involved in, let's say, a budget process.
Okay.
And then after that, he being the same person reviewing his own work.
Okay. That is nice. Someone should add another one, then we move on to the next one. Kofi, are you there? Okay, Dennis.
Okay, I think self-review threat would be this will be a threat when a professional accountant, in a way, become unaware of certain standards or rules governing the profession. Now, since you have chatted and you are out, there may be new standards that has been brought in place, and these professional accountant must review himself in case there's an assignment or there's a job that he has to perform. Now, what are the current standards governing such a process? He has to review himself to see if he's deemed fit and have the requisite skills to perform that assignment.
All right, that is very nice, but the self-review threats is not affecting the individuals. What we normally do is that we are talking about the professional accountants and their clients. So what will happen, or what are the things that will make the professional accountant not to give a proper service or proper service to the clients, or what will prevent a professional accountant not to come with a proper judgment? Are you getting it? So it's not about the individual, but what you said too is very nice. But in this case, we consider the clients and the professional accountants. We consider the client and the professional accountants. Dennis, are you okay there? All right. Okay. So, okay, Freeman.
Yes, please.
All right. You want to talk?
No.
Okay. So another example, self-review threats happens when a professional accountant is trying to review or re-evaluated his past judgments, or you have prepared a financial statement for a company and you are still the auditor for that particular company. If you realize that you didn't treat some of the items well, you can't be bold enough to say that this thing is wrong, because if you say, people will think that you don't know the thing. So that is basically about a self-review audit. Self-review threats. You are the auditor for a company, now you have been appointed as a CEO. You definitely be reviewing your previous work that you did for the company. If you realize that you have done a wrong thing, you can't say it, because you say the CEO doesn't know anything. That is what we are saying. The next one is the advocacy threats. Advocacy threats. Advocacy threats. Advocacy threats. What do you mean by advocacy threats? Advocacy.
I think the accountant praising the work of his employer
Okay.
too much, to the extent that it becomes so obvious.
Okay. Yeah, it becomes so obvious.
So obvious that there could be something fishy in there.
Okay, that is nice. That is nice. Kofi, Richard, add your own. Let's move on. Messi, add your own. Let's move on.
I think with the advocacy thread, the accountant tries to promote the organization's position by providing information that is neither false nor misleading. And such action may create that kind of advocacy thread or something.
It's okay. You'll be very fine. Okay. All right, Messi, say something.
Okay, advocacy threats. I think when an accountant promotes a promoter of something, or in support of something, maybe let's say, for instance, there is this procurement that is going to take place, and because of some interest, the accountant might be in support of something.
Okay, that is now, you have the idea. If you talk about advocacy threat, it's a situation where the accountant or the auditor is promoting the client business. is promoting the client business, is promoting it in such a way that it will compromise his professional duties. But if you are doing it in the right way, then we don't have any issue with advocacy threat. If it is not going to affect your work, assuming there's a court case against the company, there is a court case against the company, and it is the chartered accountant that is providing the legal service for the company. He is not the lawyer for the company, or he is not a witness to the company, because they say at the end of this thing, if you're able to defend us, we are going to give you a bonus of this one. So because of that bonus, you are trying to promote the position of the client to the extent that even if the thing is wrong, you are still saying that they are right. And this is going to affect your professional dealings. So that is why we have the advocacy threat. But if you are an auditor or audit firm or a chartered accountant, that you did the work for a client, that they want the work again because there's something and you need to say the thing in the right way. You are doing the right thing, you are defending the client in the right way, and this will not compromise your profession or anything. We can say that there is no advocacy threat over there. But if you are doing it in a way which will compromise your behavior of being honest and being unbiased, then we see there is an issue of advocacy over there. The next one is the familiarity threat. Familiarity threat. Familiarity threats. The next one is that. What do you mean by familiarity threats? What do you mean by that? What do you mean by that? Let's take the third ones, intimidation threats. Okay, familiarity has to do with you having a close relationship with the people, or you being with the people for a longer period of time. So as an accountant or as a professional accountant, you have been preparing financial statement for the company for over 10 years now. They will see you as part of them. They will see you as part of them. So whenever there's something to, because of that feeling of you are part of them, because you have been with them for a longer period, people you are now the same, you'll be tempted not to disclose them. That is why auditing firms, they change their auditors every 3 years. So if you go to this client for this year, maybe next year they can change it so that you don't be familiar with them. That is the issue with the familiarity threat. How often have you been with the clients? That is the issue of the familiarity threat. You have been with the client for over a number of years. You will be familiar with them. You will be like, you accept them to be part of you, or the person is your close friend. Yes, that particular relationship will also prevent you from saying what is right. Richard, do you want to talk?
Just wanted to clarify something.
All right.
You being an accountant, you are able to influence the financial and non-financial business decisions in such a way that it benefits a close member or family member.
Okay.
Will that amount to familiarity threat?
It will be self-interest threats because that relationship is so personal. So if the relationship is with a relative, it is self-interest. Maybe it is with maybe the CEO is your friend at the university, the CEO is your roommate at the university, or because of you, the CEO, you go maybe you will go and party together, then that will be the familiarity threats. But when the person is your relative, then it has to do with the self-interest threat.
But if it is somebody that is so close to you, and you have been with the person for some time,
yeah, that will be the familiarity.
Action, it leads to him or her being the beneficiary.
Okay.
So that amounts to the familiarity threat.
Yes, that is a familiar.
Okay, I just wanted to clarify. Thank you.
But if it is your family member, relative, it is self, because it's one way or the other. That particular thing will affect you directly.
Okay.
When you will be affected directly, when your relationship with the person will have, like, if you should go and do the right thing and the outcome will affect you directly, then we say it is a self-interest. Maybe it is the person is your friend. If you go and do the right thing, it will not affect you like that. So in that case, we see the criminality threat. Are you okay now?
Okay, thank you, please.
All right, intimidation threats, intimidation.
Intimidation threats is when let's say you have seen something wrong, maybe in the office, or let's say with an instruction or something being given by your boss, but you can't say it because of fear.
Okay.
Fear from your boss, or fear that you may lose your job.
Okay.
Yeah.
Okay. That is nice. 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 Dennis, say something for us.
Intimidation. I think intimidation is a threat to the professional behavior of the accountant, in the sense that where maybe your boss, I don't know how to put it more, the threat or the fear that you may be sacked from work if certain things that maybe your boss says you should do, which
Okay.
is contrary.
Okay. That is nice. All right. Richard, you want to say something?
Yes.
Okay.
And with the intimidation threat, I see it as an attempt to influence the content of work done by the professional accountant.
Okay. Okay. All right.
But that's why I don't know how whether is.
Oh, no. For this particular theory questions,
Yes.
for theory question, there is no correct answer.
Yes.
You just have to be sure of what they're saying. When they say,
When there is an inappropriate attempt to influence maybe a report that has been prepared by the accountant,
all right,
maybe from above.
all right, that's nice. When they say that intimidation threat is where maybe your life is threatened, or you are under undue influence to do something. You're going to discover something. People are saying that if you don't know, you go out and say they will kill you. They will kill you. That is the intimidation threat. So we have spent a lot, most of the time on that. What are some of the ways that you think we can be able to address these threats? What are some of the things that we can do to address them, to overcome them? What are some of the things that you think we can do to address them? The first one is whenever you think that the threat is so critical that you can't do something about it, you can resign. You can decline the offer. You think that if you should accept this offer, it will make you not to be ethical, to make you to be unprofessional, you can resign. You can also seek an advice from a person who is ahead of you, or you can seek an advice from a lawyer, what you should do in that particular case. You can also report to the disciplinary committee of the company, or you can send it to someone who is ahead of you. You can also seek advice from the professional body, or what you also do is that you can give the work to someone to review it for you. If you think that the work that you're going to do, you don't have the skills to do it, you give it to someone who will review it for you. Those are generic answers, but whatever recommendation that you are going to give will be based on the question before you, the question that you have, it will be based on you. Let's look at some of 1-2 questions over here, then we'll move on to the next topic. Question 1, who is going to read for us? Question 1.
You work for a large entity as the assistant financial controller. One of your duties is to reconcile the sales ledger each month. Every month, it does not agree and you feel sure it is associated with irrecoverable debt being written off in the individual customer account, but not included in the nominal ledger. You consider the differences to be material and have brought this to the attention of the financial controller, but he seems unwilling to act. Required, what action would you take in this situation?
Okay, what action will you take in this situation? What action? Let's talk fast. The time is far gone. What action are we taking? What action are you taking? Dennis, what action are you taking?
Please, let's pass it on.
Okay, mention the person. Mention the person's name that so that we pass it to the person.
Kofi.
Okay, Kofi, we are passing it on to you. Kofi. Kofi, we are passing it on to you, Kofi. Is Kofi on this call? Kofi, you are there, I can see you.
Yes, yeah.
Okay.
So the differences is the differences to very material and financial controller is unwilling to act. And I think that with this, what you do is that you write a memo to the financial controller and keep a copy.
Okay.
And then so that if anything comes up with it, you would use that as a proof of raising this concern. And the financial controller is unwilling to act on it.
So you won't do anything. You won't do anything to correct it. You don't think about what, how will this affect the public, because you're going to issue the financial statement to the public, and they're going to depend on this thing to make decisions. Don't you think about the harm that it is going to cause to them, or you don't want to control? You just want to have an evidence that the financial controller fails to correct it, and that is the end.
Okay, so I think you can talk to the boss of the financial controller.
Okay. Okay, that is a nice one.
Yeah, with your discovery, your findings, because you've been able to identify the source of the problem and the consistency with which it is occurring. And then you go further to the boss of the financial controller with the actions you've taken so far, so that he might look further into it.
Okay, that is a very nice one. That is a very nice one. That is a very nice one. All right, Sheriff, if you are the assistant, what are you going to do? Sheriff, what are you going to do? Sheriff, what are you going to do? Baba Sheriff, what are you going to do? Baba Sheriff, what are you going to do if you are the assistant? Are you there? Baba Sheriff, are you there? Habakkuk, are you there? Richard, what are you going to do? Richard, what are you going to do? Portia, what are you going to do? Mercy, what are you going to do?
Okay, what I'll do is that, within an organization, we all have the hierarchy. Okay. So as my sister just said, if the financial controller seems not to bother about the situation, and you know that the financial statement is going to go out, people are going to make decisions based on the financial information, which is not going to bring out the faithful representation of the financial statement. You then have to gather your facts in a written memo to the director of the financial controller, because I'm sure he will also have the final say, and whatever goes out also affects the organization.
Okay. And what if the director also is willing to accept? What will you do again?
Okay, if the director is willing to accept, then if you are capable of rectifying it, why not? It's for
Okay.
the good of the organization. So then you can rectify the information and then give it to the director as well.
Okay.
The
Nice.
director also send it to the financial controller to go through and see if it's okay. Then you
Right.
can correct.
All right. That's very nice. That's very nice. That is very nice. Okay. So that is very nice. All right. So to add to what you have already said, if it should be me, what I will do is that first, the question says, and I've informed the financial controller about it. I don't know whether it was oral or through written. So I'll write to the financial controller again that this is the issue. And maybe I'll schedule a meeting with him to talk about the issue again. If he's still not seeing the need to correct it, then I'll send it to someone who is ahead of us. Now go and tell the person. If that person too is not willing to change it, then I will be following the hierarchy like that, until it is being rectified, because it is material. It is going to affect the economic decisions that people are going to make based on the information that we are going to give out there. All right, can we move on? Let's take additional one. Then
So,
yeah.
Well, I appreciate the answers you have given and the other ones that my colleagues have mentioned.
Okay.
But practically, are these things that easy?
It's not easy.
In a lower rank, trying to, your boss says this and you overpass your boss to the next and to the next. I don't know how practically this thing is possible, unless you don't want your work again or you want to be.
That is the issue.
Go 6 feet down.
That is the issue. But that is why I'm saying that you have to, you see, first you spoke to him about the issue. You have to go to him again. You have to go to him again, or write a memo to him. The memo will be a proof. Write a memo to him, or go and talk to him again. You say that they say when persuasion fails, force must be applied. You have to go to someone. You have to go to someone that this and this. But if people are aware of the situation, even if your boss want to fire you, no, you have a point. Maybe they will fire him instead. Are you getting it? So it's not easy. Practically, it's not easy, but you just have to try your best. All right. Let's look at the next question. Let's look at the next question. There is a question. There is a nice question over here. Okay, let's look at the question 9. This is May 2021. Question 9, May 2021. Question 9. All right, who is going to read for us? Rima. Rima, are you the one reading? Yeah.
So my daughter is crying here. The estate manager of Swift International Company was charged to coordinate the procurement process for the award of a contract to construct a warehouse for the company. In the process, the chief executive officer called on the manager to ensure the contract is awarded to GD Construction Works, whose owner is the CEO's friend. When the bids were evaluated, GD placed forth in terms of responsiveness, but being guided by the CEO's directive, the project was awarded to GD Construction Works. Being guilty of not acting professionally, the estate manager admitted that he had acted unethically. Required, identify and explain 4 traits to ethical behavior as a management accountant. All
right. So what are those traits? But the traits sometimes, in one way or the other, they should be related to the case given to you, the example given to you. So from the intro that we have read, what are those traits that you can see in the question? What are those ones that you can see in the question?
Okay, so we can see intimidation traits.
That is the first one, okay?
Familiarity traits.
because the CEO is the owner of the company. And once he's the one managing the company, once he gives an order, you find it something like binding, regardless of your professional.
Okay, that is very nice.
Then honesty. Oh, yeah, no, integrity.
No, this one they are saying threats.
Oh,
Not the
yes,
principles. Yeah,
Oh.
threats.
So I'm also saying familiarity traits here.
All right. Why do you see familiarity threat?
Because he specifically told the accountant that they should give the contract to his friend.
Okay. All right. That is nice. What again?
Self-review trait.
Okay. Why do you say self-review threats?
Because he is managing the process. So in a way, he directs where he wants the contracts to go.
Okay. Don't think that would be personal interest. That would be self-interest.
Self-interest trait.
Yeah. So he would do it on the one that will benefit him. He would direct the contract to where he will benefit. So it will not be review, to be self-interest threats. Are you okay?
Yes.
Okay, which one? We say intimidation, we say what again? We say intimidation, we say familiarity, and what again?
Self-interest.
Okay, can we say advocacy?
I think self-review threat will come in when the line is guilty of not acting professionally.
Okay.
I think self-review threat.
Okay, so if he is trying to review his way, he knows that he hasn't done the right thing, so he can't say anything. You just ignore it. You ignore that particular transaction. That is very nice. All right. So basically, those are the 4 that we can identify from the question. So sometimes they give you questions on ethics. Try to see whether you can identify some of the ethical issues or some of the threats in the question before you don't just stand up and be stating them. Are you okay? You will state some of them that they might not be related to the case. Are you okay then? All right. Let's look at the idea of cost reduction and cost control. Cost reduction and cost control. You see, if you are saying that, okay, this month, I want to spend only 100 Ghana cedis for this month. For only this month. Yeah, you can say that we are doing what we call so we okay. Yeah, all right. Okay. So if you want to reduce costs for only this month, we can say that you are reducing costs. You want to spend only 100 Ghana cedis, you are controlling costs rather. But if you say that, okay, you want to put in the penalty or this one, you want to find a joint so that you'll be buying food at a cheaper price from now. So you'll be going to that joint every day. We say that you are trying to reduce costs because you'll be going to that joint every day, maybe every day. So you are trying to reduce costs. But it's something that you are going to do temporary and it will cut down your costs. We say that you are controlling costs. So cost control has to do with you spending within your limits. For a specific time. So you are giving 20 Ghana cedis to your kid that you should send it to school. You are saying that, hey, if you go there, don't go and spend more than 15 cedis. Spend only 15 cedis. So if he spend the 15 cedis, you can say that you are controlling the cost. But if you are saying that, okay, I won't be giving money to you again, I'll be cooking from the house. So if you are cooking from the house, it will be like, it will cost you 10 cedis. But if you are giving him 15 cedis, you can say that you are trying to reduce costs. So cost reduction is something that is permanent. You will do it and it will be there forever. But cost control is something that will happen just for some time, and that is the end. Another example of the cost control is budget. You drawing budget. You want to buy a car, you say, oh, my budget is 100,000 Ghana cedis. I can't spend more than that. I can't spend more than that. But you trying to go and buy original car so that you won't buy any car to some time, you can say you are trying to reduce cost. So that is basically about cost control and cost reduction. Cost control has to do with you spending within your limit and something temporal. You just want to reduce the cost for this period, and that is the end. But cost reduction is, okay, I want to reduce the cost for this period and forever. That is a cost reduction, something permanent. All right, let's move on to another one. Let's move on to another one. That is the basic overview of cost control and cost analysis. Let's come to what we call environmental management accounting. I have explained this in the intro. We are saying that nowadays you will see that a company has been taken to the court for polluting the environment, for doing illegal business activities. So there is a need for a company now to factor issues about environment, to do things to ensure that they didn't undertake activities that will put the life of the people in the society in danger. So what they normally do is that the mining companies, after they are taking the land from the land commission or whoever is giving them the land, after their concession period, what they have to do is that they have to bring the land back to its original state. So we call something recycling. They have to recycle the land to its original states. And this one, they are going to incur money. So what they will do is that they will make provision for that particular issue about recycling. That is what we are saying environmental accounting. You taking into consideration the damage that your operations will cause to the society or the people. Buying protective equipment for your employees and those things are all factored into the environmental management accounting. Because if something should have happened, they will take you to court and you're willing to pay money. So for you to avoid that, you want to factor those things into your operations, your finances, so that nothing like that will happen and you're going to incur costs. So environmental cost has to do with you taking note of the dangers or the damages that your operations will cause to the society. So what do you have to do? You have to use environmental friendly chemicals so that no harm will be caused to the society. That is about environmental issues. That is why you see, if you go to some company, you see that they have a dustbin and those kind of things. They're just trying to avoid environmental damages, the cost that they are going to incur as a result of anything that will happen from those activities. That is environmental management accounting. That is why we have this Zoomlion and those kind of things. You have people who put their rubbish and those things there, they will come and take it and go and dump it somewhere. That is environmental management accounting. All right, if you have time, you can read the rest. You can read about the advantages and the disadvantages. All right, let's look at, okay, some of the costs. If you are trying to prevent, you are trying to factor environmental issues, what are some of the costs that you are going to incur? What are some of the costs that you are going to incur? The first one is the environmental prevention cost. The environmental prevention cost has to do with you putting in place measures so that you are not going to suffer any environmental, you are not going to suffer any losses from you causing damages to the people, you causing damages to the environment. So you are just destroying the trees and you are not replanting them. What will happen? People can say that, okay, because of those things, wild animals are now coming to the house because they don't have any place to stay. And people can take you to court. So you will suffer. But what do you have to do? So after cutting down the trees, you have to replace them so that the life, those wild animals will not leave their homes and come to where people are staying. So if you want to do this, you are going to incur costs. What costs are you going to incur? The replantation cost or the afforestation cost. You are going to buy the trees and you are going to pay people to come and do it. So that particular cost is the prevention cost, the cost that you will get to prevent the thing happening, the cost that you will get to ensure that nothing bad happens to the environment is the environmental prevention cost. Another one is the environmental appraisal cost. Environmental appraisal cost is, okay, you have hired people to see whether you have hired people to replant the trees over there. So you come and see whether the trees that were planted have germinated or something. If some of them are not germinated, what will you do? You go and buy them again. So you are trying to make sure that the measures that you are putting in place are working. So the additional cost that you are going to incur to make sure that the measures are working is the appraisal cost. So if an organization should buy a dustbin where people will be putting things, if the dustbin is not there, someone can just drink water and put the rubber on this one. Someone will come and step on it and the person will fall down and you will suffer. That is the cost. So you want to prevent that cost, then you put the dustbin over there. So the cost of the dustbin now becomes the prevention cost. But if you are asking people to come and take the dustbin and go and dump the rubbish and everything inside, we can say that is an appraisal cost. That is additional cost that you are incurring. So it becomes appraisal cost. We come to environmental internal failure cost. If the systems are not there, if the dustbin is not there, and someone step on the pure rubber and the person fell down and the person got injured, what is the cost that you are going to incur to eliminate that particular happening? What is the cost that you are going to incur to make sure the person is well? That is the internal failure cost. That is the internal failure cost. The cost that you incur to solve the issue within before it will get out. That is the internal failure cost. But if you come to external failure cost, that is the cost that you are going to incur when the issue went outside, when they send the issue to court. What are the costs that you are going to get? That becomes the environmental external failure cost. Any question? Any question? I want us to finish this topic. So, do you have any question before we move on to another one? Richard, are you okay?
It's fine, please.
Okay, Freeman, are you okay? Messi, are you okay? Portia, are you okay?
Yes, please.
Can we move on?
Yes.
All right. So if you have time,
Yes.
read the advantages. All right. The tutorial questions are there. Let's come to total quality management. Total quality management, just in time, and business process re-engineering. But I've explained this ones already, isn't it? I explained the total quality management and just in time, isn't it?
Becoming other.
Is it?
You did, but you can please go back. You did.
All right. The total quality management has to do with, okay, you want to produce quality, you want to offer quality service to the clients, but this quality will not be a one-time thing. It's not something that you do and that is the end. You want to continue doing it. If you want to continue doing it, that means you have to get the right people for the work. You have to get the right people for the work. You have to make sure that people understand what you are doing. The people that you are getting understand what you are doing. Everyone is involved. Everyone is involved. You have to make sure that you are always meeting the demands of the suppliers. So for you to continually supplying quality, you have to make sure that you have the required skills, the required people for the work. You also have to make sure that you use your resources efficiently. You don't just go there and use your resources anyhow. Everyone is involved. No one is left out. Everyone is involved. Everyone knows what I'm going to do to ensure that the company produces quality product. The company offers quality services. So total quality management has to do with the continuous improvement in quality, productivity, and effectiveness obtained by establishing responsibility for process as well as output. Responsibility has to do with everyone knows his or her duty as in terms of providing a quality service. So everyone has his or her responsibility that he's going to perform to ensure that the company comes with a quality product. That is why we see total quality management. It's not something that you do once and that is the end. It's something that you do continually. How will you do it? Getting the required people. And managing your resources very well, making sure that everyone is involved. That is the total quality management. If you come to just in time has to do with you providing as at when there is a demand for your products. So restaurants restaurants mostly use this particular strategy, just in time. So that is why if you go to a restaurant, they will say, where you will attend to you, you will be there before they go and put the food on the fire. So for just in time, the company keeps zero stock. There is no storage cost. There is no storage cost. There is no issue of material waste because there is no material in stock. If you need 10 quantity, we go to the supplier and get a 10 quantity and produce whatever you want. But for you to operate just in time, you need to make sure that you have a reliable sources of supply. You have a reliable supply. Anytime that you need it, you supply it. Anytime that you need it, you supply it. So for just in time, goods are produced or goods are provided when the customers need it, when the customer need it, when there is a demand for it. That is where production takes place. When there is no demand, there is no production. That is just in time. We have the business process re-engineering. Business process re-engineering has to do with you analyzing your operations, identify those are not profitable, and you close them down, you discontinue them. So if you have about 10 branches that you identify those are profitable, those are not doing well, then you close it down. That is the business re-engineering. So any organization that closes down each branch, we say that they are undertaking what we call business process re-engineering, which is the same as restructuring or reorganization. You are cutting down those departments that are not working. That is a business process re-engineering. Do you have any question as to just in time, total quality management, business process re-engineering, and all right. So you have time, read the problems and this ones. Okay. Let's come to the balance scorecard, benchmarking and value chain analysis. Value chain analysis. Do you have any question to total quality management, business process re-engineering, and just in time? Or we can move on. Dennis, can we move on?
Yes, please.
Okay. Freeman, can we move on?
Yes, please.
Okay, let's move on. So if you say balance scorecard, for every organization or every private organization, their purpose is what? To make profit, isn't it? Their purpose or their objective is financial, isn't it? It's just to make profit, just to increase their revenue. Is that not the case, Freeman?
That is it, please.
Can you increase revenue when the customers are not satisfied?
No.
Can you increase revenue when you are not offering quality products?
Okay, no.
Can you increase
on the market?
Okay, can you increase revenue when your marketing activities are very poor?
No, please.
Okay. And you can see that customer satisfaction, quality, and those things are not part of the financial objectives. So for every organization, their main purpose is financial. They just want to increase profit, increase revenue, increase earnings per share, and those things. They have forgotten that for them to achieve these things, achieve these financial objectives, simply they have to undertake or they have to look at other non-financial objectives, which can be customer satisfaction, innovation, internal efficiency, and other stuff. So the balance scorecard is saying that no, for an organization to achieve financial objective, they have to attend to other objectives which are non-financial. So the balance scorecard gives us an approach to measure performance in so many perspectives, not only in financial perspective, but in other perspectives. So the balance scorecard gives us 4 main perspectives. One of them is financial, and the 3 other is non-financial. So we call it perspective or dimensions of the balance scorecard. In the exam, they can ask you explain balance scorecard, explain the 4 dimensions of the balance scorecard, and maybe some performance targets, some of the things that will show that you are achieving this perspective. The first perspective is the customer's perspective. The customer's perspective or the customer's dimension. This one is talking about just identify what customers need and try to provide those things to satisfy them. So if you are providing what customers need, it is likely possible that you are going to increase your revenue. You don't have to suffer before you increase your revenue. So you are trying to satisfy customers, identify what they need, and providing those things for them. So if you identify what customers need, what you are going to do is that you just channel all your resources to their satisfaction to produce things that will satisfy the customers. That is what we mean by the customer's perspective. The next one is the financial perspective, which is the business one to increase revenue and those kind of things. That is the main one. That is the main one. So you increase return on the shareholders' fund, you increase revenue, you cut down costs. Those are the financial one. Those are the financial one. Those that can be measured. The next one is innovation and learning. Learning and innovation. For organization to be stable and to exist for a longer period of time, or for you to increase revenue, you have to be one step ahead of your competitors. If all of you are selling tomatoes, you know that it will get to a time that tomatoes will get to a declining stage and sales will be very low. So what do you have to do again? What product do you have to add again? You have to be very innovative. You have to be very creative to create a product so that that product will be new to the market, and you'll be getting your profit and those things before the other people will follow by producing that product. So we talk about innovation and learning. We are talking about you getting the right technology, the right workers, the right employees, so that they will continue developing new products, coming with new ideas to help the organization to achieve its objective. That is innovation and learning. Innovation and learning. So investment in technology, investment in human resource are all parts of the innovation and learning. We also come to internal business operations. Internal business operations. We talk about internal business operation is what is the organization known for? What are you doing internally right? What are you doing internally right? Maybe the company has a strong advertising maybe the company has a strong advertising source, or the company is good at advertising. That is the thing that is making the company to make a lot of profit. So what are you doing internally to increase your profits? What are you known for? What activity are you performing good internally? Let's look at your organizational structure. Is it good? Maybe you are making profit because of the structure of the organization. So we can say internal business operations. Internal business operations. You are using modern technology for your operations. You are making sure that every goods that is produced is passed through a thorough testing process that is making your customers buy more from you. Those are the internal business operations. So we have only 4 perspectives that target must be measured for all of them. These are the targets: financial perspective, customer perspective, internal business process, learning and growth perspective. If you talk about financial perspective, what do you have to measure? What do you have to see to know that the company is achieving this perspective? You can look at the return on shareholders' fund, the increase in sales, the reduction in cost, and other things. If you want to talk about customer perspective, you have to talk about customer satisfaction, the number of complaints, the number of rejections, and the number of new customers that you have acquired. If you talk about the internal business process, you can work on your distribution channels, the number of new products being rejected, and other things. If you talk about learning and growth perspective, some of the target that you can use is that the number of machines acquired, the number of the caliber of workers that you have, the type of machines that you are using, how many training sessions are being organized within a year. Those are some of the targets that you can use to measure the learning and growth perspective. The learning and growth perspective. So Balanced Scorecard has given us this perspective. But if we are writing a case study, if you are a student that you are going to write a case study, balance scorecard is a model on its own. So if you understand these ones, it will help you. Let's look at the benefits of balance scorecard. Let's look at some of the benefits. It avoids management reliance on short-termist or incomplete financial measures. So if you look at the financial statement, we're only talking about the financial issues, the profit that we have made over the year. But we don't talk about how satisfied our customer is, the technology that we are using, the process that things that we are doing good internally. We don't talk about that. But if you're using a balance scorecard, the balance scorecard will now tell you that, okay, we are able to achieve these customers, we are able to achieve this, we're able to satisfy our customers, we're able to acquire this number of technology. So the balance scorecard is preferable to the traditional management accounting method where our mind is only on the financial objectives. So by identifying the non-financial measures, managers may be able to identify problems earlier. So if our revenue is decreasing, assuming our revenue is decreasing, if you're using a balance scorecard, we can be able to know what is making our revenue decreasing. It can be like we are not satisfying the customers, we are not giving to customer what they want, or our internal business operations or our machines that we are using are archaic. They are not up to date, so they are producing faulty and fake products. So if you're using the balance scorecard, it can help you to identify where the problem is. If your revenue is reducing, what is causing the reduction? If you use the balance scorecard, you may be able to identify where the problem is coming from. It can assist stakeholders in evaluating the firm if measures are communicated externally. So the stakeholders know what measures they are using, what perspective they are using. So we can be able to see, okay, this company is able to satisfy their customer, they're able to achieve this, they're able to buy this number of computers and those kind of things. Let's come to the disadvantages. Let's come to disadvantages. It does not provide a single overall view of performance. So the balance scorecard focus on four things. So we are saying that for you to achieve one, you have to achieve the others. So even if you are calculating the ROCE, we are assuming that the ROCE is being achieved based on how best we satisfy our customers, the technology that we use. So we are not giving the report on, we can't give a report on one perspective. We say that all the perspective work together. So if you want to give overview on one perspective, that means you have to give it on other one. You have to give the credit to other ones too, because they work hand in hand. There is no clear relation between the balance scorecard and the stakeholders analysis. There is no clear relation between the balance scorecard and the stakeholder analysis. The stakeholders, what they want is how is the company performing. They are not interested in how best the customers are being satisfied or anything. They just want to know how is the business doing. It often involves a substantial shift in corporate culture in order to implement it. So if we want to implement this particular balance scorecard, it means that we have to get people for each of the perspectives. We have to get HR departments, competent ones. We have to get the IT department. We also have to get qualified people that will do the production. But let's assume that this is a small organization. Can a small organization afford all these things? No. So this one is only applicable to organizations that are big because they have the resources, they can get all these things. They can get these things. Do you have any question before we move on to benchmarking? Dennis, do you have any question before we go to benchmarking?
Okay, no.
Okay, so we can move on. Freeman, we can move on.
Yes, please.
Richard, we can move on.
Yes.
Okay, you have to pay attention. There's a question coming 10 marks from this particular slide. And I will tell you where you have to focus on. You have to focus on. The first one is the benchmarking. I've spoken about benchmarking already, isn't it? So who can give us the overview or the idea about benchmarking? If you see benchmarking, what is the meaning? What comes to your mind? Benchmarking.
Comparing yourself that are doing better than you are.
Okay. Okay. That is very nice. That is very nice. Do you all agree with that?
Yes.
Are we all okay? Do you all agree that that is benchmarking?
Yes.
Okay, if we all agree, let's move on to the next topic. Or you have something to say? Okay, benchmarking has to do with you trying to compare your performance to a person that you see that is best performing in that area. That is best performing in that area. So if you are into hospitality, then you can try to compare your performance. Maybe you can try to compare your operations. Maybe you can try to compare your account department with that of what KFC department, KFC account department, because you think that a KFC is doing better than you. That is what we call benchmarking. Compare your performance with the person that you think is best in that particular field. Types of benchmarking. Types of benchmarking. Comparison can be done in so many ways. You can compare your own operations. You can compare your HR operation. You can compare your HR department with that of accounting department. That is internal. Or if you have two branches, you can take the HR department of branch A and compare it with the branch B. But you have to know that branch B is performing well. That is why you are comparing it to the branch B. That is the internal benchmarking. That is the internal benchmarking. That is the internal benchmarking. So if you have a business unit, you are trying to compare one unit with the one that you think is performing well. That is the internal benchmarking. The comparison is done within the same industry or the same company. That is the internal benchmarking. You come to functional or operational. We come to functional or operational benchmarking. If you come to operational or functional benchmarking, what we normally do is that you are a hospitality company, you take your HR department or your audit department and compare it with a bank with the same, compare with the same department with a bank. So you take maybe ADB, you take the HR department and you compare with you in the hospitality, you compare to your HR department. So why is ADB HR department doing better than us? Why? What is the secret? So after doing that, then you try to bring those things into your HR department to improve upon their performance. So for functional, the comparison is done with the performance of an organization that is in a different industry. The organization is not within your industry at all. It's not within your industry at all. But you think that they are best in that particular field. So they are best, the HR department or the HR unit is the best. So you are trying to compare your own with their own. That is a functional or operational benchmarking. You come to competitive benchmarking. This is compared with your direct competitor. But you should see that your direct competitor is doing better. So you are a hospitality company and you are comparing your performance with KFC. You think that KFC is doing better. So you are comparing your accounting style with that of the HR, that of the KFC. That is competitive benchmarking. Compare your performance with the best, your direct best competitor. That is the competitive benchmarking. We also have another one called customers benchmarking. You compare performance with what the customers need. Strategic benchmarking is gathering information to assist in strategic, but this one is not cool. So the four that we have is the internal benchmarking, functional or operational benchmarking, competitive benchmarking, and customers benchmarking. Okay, you can. So if you have a question on benchmarking, they'll ask you about the types. You have to explain them. All right, let's move on. After I read on the evaluation, what you have to do and those kind of things. Let's come to value chain analysis. Value chain analysis. Value chain analysis. So if we talk about value chain analysis, what we are talking about is that what are those things within the organization that comes together to produce a service or to produce a product? What are those activities within the organization that are or that jointly produce a services or that jointly produce a product? That is a value chain analysis. That is a value chain analysis. That is a value chain. So the things that come together to produce a product, that is a value chain. That is a value chain. But the value itself, how is a value added? If you buy a product 10 cedis and you are selling it 30 cedis, you have added 20 cedis to it. So you can say that you have added 20 cedis value to it. That is a value addition. But if you talk about value chain, we are talking about what are those activities in organization that comes together to produce a product, How is the product of an entity being produced? What are the steps that it passes through? What are those things that help the company to come with a product? That is a value chain that we are talking about. That is a value chain that we are talking about. But basically, we have two activities. One of them are considered to be primary activities, and one of them are considered to be secondary activities or supporting activities. Under the primary activities, we have 5 major headings. The first one is the inbound logistics. Inbound logistics has to do with the raw materials coming in. How do you handle your raw materials? So it has to do with the receipt and handling of raw materials. Where do you put your raw materials? The place that you put, are they locked? Are they fenced? If you are putting your raw materials at a place, an open place, it means that before you start operation, you are going to buy or you are going to incur additional costs where people can come and steal the materials over there. So inbound logistics has to do with the receipt and handling of your raw materials. Where you put it, do you keep records? And those things are the inbound logistics. Let's come to operations. Operation has to do with the conversion of the raw materials into finished goods. What are the things that you use to produce your listing? Which type of technology do we use? Which type of technology are you using? If you're investing more in technology, it means that within your operation level, there will not be any losses because you are using a modern technology. So there won't be any wastage. There won't be anything like loss of product or any loss. And also, if you are taking a good care of your raw materials, the inbound logistics is very strong. Where you are keeping the product is very conducive, is very safe. It means that you won't buy additional raw materials to produce the quantity that you want to produce because there won't be any spoilage. The product won't go bad or because where you are keeping them is very safe. So if you want to analyze these activities, they are how will one help you to achieve the other? If where you are keeping the raw materials are safe and you are buying quality material, it means that if you are producing or if you are converting your raw materials into finished goods, there won't be any issue with wastage because you are using a modern technology. You are buying a quality. Your staffs are skilled. Your staffs are well trained, so you won't have any issue with wastages where you have to go and buy additional things to come and complete your production process. Another one is the output logistics. After production, what's next? You have to go and keep the goods somewhere until they are needed. So the storage and distribution of our output to the customers is the outbound logistics. So after production, what do we do? Do we send the goods to the customer directly, or we have to keep it somewhere? We have to keep it in a warehouse for some time before we send it. That is the outbound. Those activities are included in the outbound logistics. The next one is marketing and sales. How do we inform the customers about our products? How do we inform the public about our product? how do we tell them about the usage of our products? That is the marketing and sales. And this is basically the promotional activities. The promotional activities. How do we inform them about our products? So those activities that you are going to undertake to inform the customers about the existence of your product is what you call marketing and sales. Marketing and sales. We also have service. Service is after sale. After sale, after sale services being rendered to the customer. So the first one is installation, maybe a checkup on the customers and see how well they are using their product or those kind of things. So after service, those services that the company is going to offer after point of sale, which one of them is installation, repairs, maintenance, and those kind of things are what we call the service. What we call the service. So basically the primary activities consist of 5 things. Is the inbound logistics, operations, outbound logistics, marketing and sales and services. Let's come to the supporting or the secondary activities. The secondary activities has to do with, the first one is the procurement. Those things are not directly, we can't see them, or that they are not directly attributable to the organization operations, but they help us to come with a quality service or products. So procurement has to do with the purchasing of inputs, business service needed by the firm. So the acquisition of the raw materials and the assets needed by the firm will fall under the procurement. So you go and buy the product and send it to those who need it. Buying the product doesn't mean you should just go out there and buy any product. If you go and buy a fake product, it means that you have to incur additional costs to be able to handle them, because if you're handling them, it will just fall, or something will happen, it will fall. So you're going to incur additional costs. And even if you are converting them into finished goods, there will be a lot of wastages. So if your procurement is very strong, you are buying a quality product at a reasonable price, it means that even if you don't spend much in handling them, nothing will happen. Just compare gas cement or diamond cement. These things are in this rubber, they are in this paper, their cement are in paper, and compare them with the Dangote cement. Dangote cement are in rubber. So you can put Dangote cement over there. When you fall on it, nothing will happen. But if you take diamond cement, you can't put it under the rain. So this is what we are saying, that the procurement must be very strong. So if you are putting these 2 cement under the rain, it means that the diamond cement, you can't use it again. So you have to go and incur additional costs. So your operations will not be efficient. But if you are taking Dangote, it means that it can be there forever. You don't have to incur additional costs. So the procurement department have to be very have to be up to task by getting a reliable source and a quality product for the operation. The next one is the technology. The technology has to do with your tools that you are using. Are they up to date? People are using computer, you are still using printer. No. So the technology has to do with your modem, you doing your research. You have a strong research and development department where they are every day they are coming with new ideas, new products, and those kind of things. And if you know that if you are investing much in technology, it means that your inbound logistics, your operations, your outbound, your marketing and everything, your after self-service and those things will be minimized. Because if you're using a modern technology, it means that you're going to produce a quality product, and you don't need to offer any after sales service again, because you know that your products are of higher standard. There is nothing that you have to do again. There's nothing that you have to do again. The next one is the human resource management. Human resource management, that has to do with the recruitment, training, development, retention, and discharge of staff. So the human resource management has to do with you getting the right people. Assuming you have the right people managing your raw materials, they know how to handle it. They are experienced. You have the experienced people converting your raw materials into finished goods. There won't be much wastage there. You have a qualified people, experienced people managing your distribution and those things. You have experienced people doing your marketing, experienced people offering after sales. But if you have experienced people, if you invest much into human resource, your operations, people will make sure that they are producing quality products. If the the products are of quality, there will be less cost of after service. You incur much cost of service because the products are already of quality. The people are doing that thing, they know how to produce, they know how to handle the product. So there won't be any damage after so. You know incur much cost over there. The next one is the firm's structure. The firm structure has to do with the administration purpose, the organizational structure, the accounting, finance, the legal, the information system, and other functions. So how effective is the accounting department? How effective is the legal department of the company? That is the firm structure. The firm structure has to talk about administrative issues. So basically, this is what we call the value chain analysis. So we have some questions over here that if you have some time, you can go through them. So that is basically the contemporary approaches to management accounting. But I'll go over the likely areas that you have to read. Maybe the areas that might come in the exam. So what do you have to read? The first thing that you have to be aware of is the ethical issues, the ethical threats, the principles. The next one that you have to be aware of is the cost reduction and cost control. Another one is the just-in-time total quality management business re-engineering. Another one is also the benchmarking balance scorecard, which is very crucial, the value chain analysis and its branches, the primary and the secondary activities. Those are some of the questions that you might be meeting in the exam for 10 marks, So basically, this is all about the contemporary approaches to management accounting. Do we have any question? Do you have any question? Do you have any question?
No.
Are we okay? All right, we also have the activity-based costing, but that one we do it next week. It's a whole calculation on it. We can't do it now. So under this one, under the contemporary approaches to management, we also have activity-based costing. Why should we have activity-based costing? We should have activity-based costing because those days overheads are being apportioned based on labor hours, machine hours, which some of these overheads do not have any relationship. They are nowhere related to labor hours, machine hours, and those things. Right now, you are talking about material handling cost. You incur a material handling cost. And you are saying that you are going to apportion a material handling cost to the department based on labor hours or based on machine hours. How is material handling cost related to machine hours? They don't have any relation. So at the end of the day, the department with a higher machine hours is going to take the higher portion of the overhead, which is very wrong. So the activity-based costing is saying that, okay, let's look at the overhead cost and apportion them based on activity that causes them, based on activity that we incur those costs for. So material handling can be like maybe the number of materials in stock. We can use number of materials in stock. That would be reasonable apportionment than labor hours or machine hours. You have inspection costs, and you are saying that you are going to apportion inspection costs based on machine hours. No, inspection costs and machine hours, they don't have any relationship. But if you are going to look at the number of inspections done or the number of employees, yes, it's something justifiable. You can use that as a basis of apportioning the inspection costs than machine hours. So activity-based costing is coming to replace the traditional absorption costing method. That is why we should have the activity-based costing. Overhead should be apportioned based on activity that drives them, that causes them, that made them to occur. So that is why we are going to have the activity-based costing. But activity-based costing, the only thing that we are going to look at is the apportionment of the overheads. We should not be using the traditional apportionment methods, which is based on labor hours, based on machine hours, based on number of units produced, and the rest. No. Sometimes some of these overheads are not directly related to these things that we are using to apportion them. So that is basically about the activity-based costing, and we do it next week. But what I want to say is that I want to see if we can bring the MA class to Saturday in the morning, 6 to 9:30 or 6:30 to 9:30. I want to see if we can do that so that in the morning, so we just fix it on Saturday. So that if we are going forward, we find another day, then we add another day to the Saturday. We add another day to the Saturday. So if you can make it maybe 6:30 in the morning Saturday to 9:30 in the morning Saturday, if we can do it, if you're okay with it, then we start next week. But if you're not okay, we can still maintain this time. So I'm waiting for your reply. I'm waiting for your suggestions. Everybody must talk because everybody is going to attend the class. So don't let people decide for you. Don't let people decide for you. All right, so let's start talking. Baba Sharif, I will start from Baba Sharif. Baba Sharif, are you okay with that time? Prima, are you okay? 6:30 to 9:30 in the morning, Saturday.
No, please. So,
You are not okay?
yes.
All right, we have one person. Baba Sharif. Okay. Eric is saying that he's okay. Dennis, are you okay with that time? Dennis, are you okay? Okay. Sabduk is saying that he's okay. Okay, we have 2 people against 1. Dennis, are you okay with it? Okay, Kofi is also saying that he's okay. Hey, the numbers are coming. Messi, are
Yeah,
you
I think
okay?
I'm okay.
Okay,
Yeah.
Messi, are you okay? Messi, she's even adding I'm not too. Okay. Portia, are you okay? We have 3 people. Portia is say I'm not okay. Okay, 3 against 3. Hey. 3 against 3. This is getting interesting. Okay, 3 against 3. Kofi, are you okay? Kofi says he's okay. Okay, 3 against 3. So who are those going to make the difference? The ladies are saying that they are not okay. Okay. Are the ladies that we have over here? Are we all? Are you all mothers?
Yes, please.
People, all of you are mothers, but you have to know that you have to make some sacrifices to pass here. You after. Jocelyn, are you okay with that time?
I didn't even get the time.
6:30 to 9:30 in the Saturday in the morning.
In the morning or evening?
In the morning, Saturday. Jocelyn, I can't hear you. Richard said I'm not okay. Okay. All right. A lot of people are not saying okay, so let's maintain this time. Let's maintain this time. Let's maintain this time for now. Let's maintain this time for now. Maybe if you are going, if you yourself you look at the situation, maybe you suggest a time. But this one thing I have to tell you is that this thing you are the one who needs it. You are the one who needs it. So you just have to make out time. You see, you need sacrifices to pass this exam because the syllabus, if you look at the syllabus, it's very plenty. It's very plenty, and I'm not even sure. But let's be going. So you have to make out time for yourself to learn and those kind of things. But as it stands now, let's maintain this time. Then we see how we can go about it when we move forward. All right. So do you have any question? Do you have any question? Or we are all okay? We are all okay. Do you have any question as to what we discussed today? Prima, do you have any question? Okay, Portia, you want to talk?
Actually, how many times will we be in a week?
It's only once. That is why I'm saying that let's put a Saturday there. Then if you are going, we find time, we add it to the Saturday. So for now,
Money will be okay.
is that money will be okay for you?
Money is there.
It's not be okay, isn't it?
Evening to be better.
Okay, you don't worry, don't worry. We keep the evening for now. Fima, do you have any question?
No, please.
All right. Richard, do you have any question? Richard, do you have any question? Richard, Dennis, do you have any question? Or we can move on.
No question.
Okay, Kofi, are you okay there?
Yes, I am, please.
Do you have any question for us?
No.
So we can move on.
Sure.
Okay. So we unfortunately we can't move on. This is the end of this one. Next week we do the activity-based costing. We do the activity-based costing. Do you have calculators?
Yes, I have.
Everyone, if you're in Accra, you don't have calculator, I have one for you. So you just have to contact me and bring it to you. And even if you have the calculator is old, you have to change it. You need a new calculator to pass the exam. So Portia, if your calculator is old, come and buy a new one. Messi, if your calculator is old, come and buy a new one. Because this one, the calculator has depreciated and the efficiency will reduce. So you need a new one to pass the exam.
Ayeka.
So if you don't have a calculator, you can pick my number for the platform and WhatsApp me. I'll bring it to you myself. Within Accra, I'll bring it to you myself. All right. Thank you. So if you don't have any question, then we call it a meeting. We call it a meeting. All right.
Thank you.
Okay. Thank you, everyone.
Okay, welcome. Thank you.
Okay. All right. All right. So.